Can only get so excited about the US dollar that I peak. I mean, I could lay out some dollar bills, but would anyone even stick around? There are a lot of things that affect the price of gold, and the strength of the US dollar is probably the one I enjoy talking about the least. I have my reasons. The big one, though, it's pretty simple. The conditions just never really line up. If you were to take last week's dollar downgrade as an easy example, well, Fitch downgraded the US credit rating from a perfect AAA to a AA+. And that's only the second downgrade in the nation's history, so you'd expect the US dollar to take a hit, the DXY to drop, you'd expect investors to get nervous and pull their dollar investments. But nope, the dollar had a banner week. It posted its biggest weekly gain since last September, and that was when the dollar was already trading at its highest level in 2 decades. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. If I started this thing out sounding a little bit frustrated, well, don't worry, I'll get over it, because anyone living in the US wants the dollar to do well, whether they realize it or not, whether they admit it or not. I mean, it should go without saying that if your country's economy is doing well, then things are going to be easier for you. Another thing you get is that when the dollar is doing well, buying gold with US dollars is cheaper, and there's a reason there. Gold is more expensive in other currencies because gold is US dollar denominated, so higher relative prices in other currencies is going to decrease demand. And then the other reason is that when the dollar is strong and the rates are high, we have yields on a lot of competing products, like treasury products, that look more attractive than gold. Those are the big reasons that a strong dollar pushes the price of gold down. And we can at least acknowledge here that we get 2 positives out of that, really, regardless of whether we think the numbers are cooked or if they just don't make sense. So the hard part here is that we go from trying to predict the price of gold directly, which we already know is a little bit of a fool's errand, to trying to predict the strength of the US dollar and its secondary impact on the price of gold. Something I don't find very entertaining, and something I've already pointed out doesn't seem to line up with reality. Now, on the upside, though, if the dollar continues to overperform those expectations, then you're getting a discount on gold purchases, again, if you're buying in USD. And if one of the reasons that you're buying gold in the first place is to protect against an eventual weakening of the dollar, or a looming fall right over the cliff, I don't want to leave anyone out, well, then being able to buy at a lower relative price, that's a good thing. If the dollar loses strength and gold turns around and it surges, well, then the value of what you already have can help balance things out. So looking out longer term, everyone seems to be calling for new all-time highs for gold next year in 2024. You've got analysts at big banks, they've been pushing their price targets up, and nothing I can see contradicts any of that, really. The dollar can't continue this perpetual climb. The Fed can't continue raising rates. Inflation's not going to reverse out the impact that it's had over the past 2 years. And central banks, they're not all going to decide to dump gold all at once. So everything seems pretty positive for gold over the next few years. The only possible counter to that I can see would be some kind of unreasonable performance from the US dollar. So what does that even mean? Well, we hear about a soft landing, just totally avoiding a recession. Things that, again, don't line up with reality, but that could play out in public perception all the same. And if we get that elusive recovery, well, what happens to the price of gold? Sorry, I can't tell you, but I think that's the question that's in the back of a lot of people's minds. If you were around for the 2011 run on precious metals prices, well, you already know what then happened in 2013. I was there. Gold is still shiny to me. Just look at this stuff. That price drop in 2013, well, it wasn't enough to change my impression of how it performs. That fall, it's actually what got me to start buying heavier. I don't have a nagging feeling the floor is going to fall out again, that it's going to give away 30% of its value, but I don't doubt the idea that when things seem calm in the world, well, gold is boring. And when gold is boring, prices are low. So what would a soft landing look like? Well, I think that would make things in the world seem pretty calm. And that on its own might have a certain impact on the price. From its all-time high in 2011 to the trough in 2014, gold gave up a third of its price. In that same period of time, silver gave up 2/3 of its price. So if you were buying in 2011 to hold until 2015, well, you took a bath. But if you were averaging your purchases throughout that time frame and you're still holding today, well, you probably did pretty well. It's all about time and patience. The simplest way that I can think of to look at gold price is this. How long am I going to hold on to it? 20 years might be a reasonable number. So do I think the dollar is going to be stronger than it is today in 20 years? I don't. So how about 5 years? Well, seeing what we're seeing today, that's a little bit harder call. So dollar strength, it's not the only thing moving gold price. At least one of you are thinking that right now. That's just one factor, but it's a big one. Obviously, there's more at play. The reason I picked USD performance for this video is just because it's the largest contributor to the current lag in gold price. And if the soft landing trick gets pulled off, meaning the news cycle uses those words and traders buy into it, well, that's the biggest possible torpedo for gold price that I can see. Most other likely events, they would do the opposite. They would send the price up. I don't think any of this is worth worrying about. The question just comes up a lot. Is now a good time to buy? And I think now is a good time to be buying, but I couldn't tell you if now is a good time to buy once and then walk away. In that kind of situation, you're looking at a solid 50-50 chance. Future price could go up, future price could go down, and really it's going to go both up and down. If you were to hit it, it's going to be out of sheer luck, but just being realistic about what's coming, we could see a noticeable drop for a period of time. That's possible. But if you were to buy through that, you'll probably do well in the long run. Again, that's assuming you're not waiting for that one magical purchase. So no one can answer the question of whether right now is the time to buy, but if you were to change that a little bit and just ask if now is a good time to be buying, well, I do, but I do it with a few rules. First, I never assume today's price is the lowest it can go. I don't plan for, I don't rely on significant gains. I don't take on any debt to buy gold, and I don't let it keep me out of other markets. So I don't go all in. It's a pretty easy way to say it. For me, it's a secondary thing. I do it in the background. It's there in case I need it in an emergency. It's not there to help me get ahead. I don't need it for day-to-day expenses, and it's not there to help me buy nicer things. So I think by now I've probably said it, but I don't get too caught up in that question of where the price of gold is going. I just want to know what's moving the price. That helps with expectations. Helps me keep calm, I guess. Calm enough to make good decisions like buying if we get a big drop, holding if we get a big spike, just continuing the marathon pace over years, not over days. I mean, marathons suck. I've done two. It's probably at least one more than I should have. If you run too hard, you're going to bonk. And if you go too hard on precious metals, perpetually thinking the end is near, we're going to burn out there too. I think it's a pretty good analogy. The best plan is always going to be to pace yourself. Let's call it good there. Let us know where you think the price of gold is going over the next few years, whether you think the story of a soft landing could affect things, and whether or not that impacts what you're up to, what you're buying. Speaking of which, the 2023 Liberty High Relief from the US Mint, that hits Thursday the 10th. I'd be curious about your thoughts there too. So let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.